Hey there YouTube. So for this video I wanted to cover IRS Form 8621 when you're doing a MTM or mark-to-market election for your PFIC investment. So I have one slide in front of us here with some of the rules and how this works, and then we've got an example 8621 as part of a completed return that we can look at as well. So what is the 8621? Well, 8621 is filed by U.S. persons that hold stock in a foreign corporation that's treated as a passive foreign investment company. Okay, so a passive foreign investment company is essentially a foreign corporation that just invests in certain types of passive investments. So stocks, bonds, other types of investments, rents, royalties, things like that. So it's not really an active business. It's just kind of like a fund that trades in other securities, right? So in the U.S., we see this all the time with ETFs, mutual funds, other types of vehicles like that. So the 8621 is filed if you're a U.S. person and you're investing in one of these that's a non-U.S. entity. Okay. Now, what's important with the 8621, it's not just a disclosure that you're making with the IRS to let them know that you hold this stock. There are also a lot of elections that can be made with the 8621. So under the default treatment, a Section 1291 fund, you can leave it as is if you want as a U.S. person, but it's generally more preferable if you make what's called either a QEF or qualified electing fund election or a mark-to-market MTM election. I have a separate video that covers the QEF election and what the tax impact of that is and how to complete the 8621 for that. So I'll leave a link below for that video, but in this one I want to focus in on the MTM election. So the MTM election, the mark-to-market it's exactly what it sounds like, right? So you as a U.S. taxpayer, you're marking to market the stock from year to year, and whatever the increase or decrease is in the value of the shares is what you're including in your current income. So the U.S. person, when they mark to market the stock, they include the excess of the fair market value of the stock at year end over their basis in the shares. Okay, and this happens regardless of whether the PFIC actually distributes you any cash. So generally, as U.S. Owners in corporate stock, we think that, okay, well, I don't have any income inclusion unless I get a dividend or if I actually sell the shares and get a capital gain, right? With PFICs and an MTM, it doesn't work like that, right? Whether you sell this, you don't have to sell the stock, you don't have to get any cash. If you make a mark-to-market election, you are recording income, whatever the increase in value is. Okay, very important. And the character of the gain is also important, right? So the entire amount of this mark-to-market is going to be treated as ordinary income or loss. There's no capital gain treatment. Okay, so let's look at an example of an MTM election here. We have John. He's a U.S. citizen and tax resident, so he's a U.S. person for purposes of these PFIC disclosures. So at the start of the year, John opens a UBS brokerage account in Switzerland, right? So he wanted access to the Swiss markets, couldn't get it through his U.S. broker, so he opened a foreign brokerage account, and then he put $75K in and bought 15,000 shares in a Switzerland-based mutual fund that's publicly traded on the SIX exchange. Okay, this is really important. The MTM election is only available if the PFIC is traded on a organized exchange. Okay, you cannot make an MTM election if the stock is not publicly traded. So a lot of, let's say hedge funds, a lot of hedge funds are organized as private companies. They issue stock to investors. They are not publicly traded. So for a private hedge fund like that, that's a PFIC, you can't make an MTM election, but you could make a QEF election. Right, so the MTM election is just available for PFICs that are publicly traded on exchanges. Okay, very important to remember. So at the end of the year, what happens? Well, John's $75,000 investment appreciated to $80,000. Okay, so he has a $5,000 capital appreciation, but he hasn't sold it yet, and he hasn't gotten any dividend income. So when John makes this MTM election, he's going to be recording in income the increase in the fair value. Okay, so let's look at the 8621 and see how John fills this thing out. So we have the 8621 here for John. His information is populated up here. He's an individual shareholder, okay? And then enters the name of the foreign corporation. Again, this is a fake example here. So we have Swiss Mutual Fund, Inc. That's going to be the foreign corporate entity. The address of the company, reference ID number. You enter this basically using whatever methodology you want. This is the reference number is used year to year by yourself to internally track the 8621. So whatever you come up with as a reference ID number, it's usually just the name of the company, and then maybe put the number 1 after it. Use this same reference ID number every single year that you're reporting on this same PFIC. So if John next year has to include this thing again because he didn't sell it, he would input the same data and then use the same reference ID number. Okay. Now, part 1, summary of the information, and just complete this information based on what your investment looks like with the entity. So you'll know what type of stock you have. Let's say it's Class A. When you bought the shares, how many shares did you buy, and what's the value of those shares at year end. Now, because this is publicly traded, John can simply look into his brokerage account on December 31st and see what's the value of the stock, right? And so in our example here, he's looking at $80,000, so he checks this box. Now, line item 5 is the type of election we're making. So we're doing a mark-to-market election under Section 1296, and then 5,000 is going to be the amount of income inclusion. Okay, so in part 2, again, we indicate here what election we're making. So part 2C, election to mark-to-market the PFIC stock, and then we have to complete part 4 down here, gain or loss from the mark-to-market election. So line 10A, fair value of the stock at the end of the year. Remember, it's $80,000. And then John's adjusted basis in the stock at the end of the year is 75, right? Because that's what he paid for it. So that's his first year adjusted basis. Now, in the years going forward, his adjusted basis is going to be different, right? So next year, assuming, again, he doesn't get any dividend distributions or doesn't buy any more shares, his adjusted basis for next year is going to be 80, right? Because that's what he marked to market the value of the stock for this year. But in this year, fair value at the end of the year is 80. His adjusted basis is his initial cost basis, right, which is 75,000. So the amount of the gain here that he's going to include as ordinary income is 5K. Okay, so this is how he completes his 8621. The other sections are all left blank because they're not they don't apply in this context, because he's not leaving it as a 1291 fund. He's not making a QEF election. We're just doing the mark-to-market election here. Now, once you've completed this, also very important, actually record the income on the return and pay the tax. So where do you do that? Well, on Schedule 1, so Schedule 1 of the Form 1040 is additional income and adjustments. Okay, so this is where you report all those other income items that otherwise wouldn't be reported directly on page 1 of the 1040. So in this case here, John has to report the ordinary income from the PFIC MTM, and that's reported on line 8. So you see here other income or loss. We have mark-to-market election 8621, and then we have the $5,000 that's flowing through from the 8621 for the mark-to-market election. So the $5,000 is just included in his ordinary income. He pays taxes on it, whatever his effective marginal rate is going to be, and then that's the end of it. So that covers it for this tutorial. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.